It's great to see everybody here and so many of our clients. My name's Simon Andrews. I'm IFC's new country director for Pakistan, based here in Pakistan, in Islamabad. It's great to be here with you this afternoon. IFC, as I'm sure you're all aware, is a member of the World Bank Group. So we're a development finance institution. I also want to say a very special thank you to Pakistan Banks Association for this opportunity to speak to you about one of the most important topics in economic development, and that's agriculture and agribusiness. So agribusiness is the foundation of nutrition and food security, and one of the most powerful tools we have to feed growing populations and address poverty and unemployment. That's why agriculture and rural development is one of the highest priorities for the World Bank Group in Pakistan. Pakistan loses about 10 to 15% of its grain production and up to 35 to 40% of its fruit and vegetable production after harvest because of inadequate storage, a lack of cold chain infrastructure, poor grading, and weak market linkages. Every ton lost represents wasted investment in land, water, fertilizer, and most importantly, a loss of farmers' time. It reduces incomes, and it increases food inflation. Pakistan is also one of the world's largest dairy producers, yet more than 90% of the milk is sold through informal channels where quality and food safety remain significant challenges. At the same time, many children in Pakistan are not receiving adequate nutrition. About 40% of children under the age of 5 in Pakistan are stunted. This means that they will never realize their full potential. They won't perform at school, and they'll never learn enough to make a meaningful living. And for Pakistan, the cost is enormous. Stunting weakens human capital and reduces the country's long-term growth potential. Also, the fact that 75% of women remain outside of the economy further weakens and undermines Pakistan's human capital and growth potential. These numbers underline the pressing need to unlock agriculture as a key driver of economic growth and also the huge opportunity for Pakistan if we can unlock it. My takeaway from Dr. Hussein's data on investment and private sector investment as a share of GDP is that the only way is up. So what can we do? First, we can mobilize capital. Although agriculture contributes about 25% of GDP in Pakistan, it receives less than 5% of formal bank lending. This means borrowing is tough to get and it's expensive. We need to develop financing tools that increase access to finance for farmers so they can finance the crop cycle and use crops and movable assets as collateral for loans. Second, we need to strengthen the foundations by improving physical, human, digital, and market infrastructure like access to information and knowledge about how to better manage your crops to improve yields, building reliable storage and transportation facilities, and using technology and connectivity to connect farmers better to markets. And third, let's revamp policies, because agriculture can only become a real growth business if the rules are clear, predictable, and investment friendly. And that will allow private capital to flow and the sector to become bankable. So what are we doing at the World Bank Group to make this transition happen? So AgriConnect is a global initiative that prioritizes farming and agribusiness as drivers of growth, economic development, and food security. Through AgriConnect, the World Bank aims to double our global investments to about $14 billion a year by 2030, with the goal of improving the lives and the incomes of about 300 million farmers. This means closing the gaps that keeps farmers trapped in low productivity, subsistence level agriculture, market gaps, infrastructure gaps, finance gaps, and knowledge gaps. Let me share a couple of examples of how AgriConnect is working from around the world. In Papua New Guinea, we're linking cocoa and coffee smallholders to markets, strengthening value chains, improving processing and post-harvest practices, and expanding access to finance to help them move beyond subsistence level farming. In Africa, we're working with ag tech solutions and platforms to help financial institutions use real-time agricultural data to better understand and manage the risks of lending to farmers. In Pakistan, our goal is to shift the agricultural sector from a fragmented production with an asymmetry of information to an integrated value chain that makes agriculture more predictable, more bankable, and more attractive for private investment, and with better outcomes for farmers. Specifically, we plan to work with partners on storage facilities and warehouse receipt financing. We'll also use digital platforms like the Zahazi 2.0 platform to build stronger links between farmers, buyers, service providers that allow farmers and smallholders to participate in more organized and higher value supply chains. We'll work with our partner banks and microfinance institutions to develop and promote rural access to finance and information for farmers. Many of those partner banks and microfinance institutions are here today. Thank you very much for your partnership. Very recently, we launched a partnership with PMEX to improve access to transparent commodity price information, allowing price discovery and enabling farmers and agribusinesses to make more informed production and marketing decisions. We are also working on seed quality through improved seed certification processes and supporting innovative agtech solutions that can scale. And finally, as we've heard a lot today, innovation has to be part of the solution, but practical innovation linked to commercial models and local market needs. We're also exploring circular business opportunities, including models that could convert agricultural and organic waste streams into higher value inputs for broader food and agriculture system. Is this everything that needs to be fixed? No, it's not. Is it enough? It will go a long way. I've worked on this transition in other countries, so let me give you an example of Cambodia. Cambodia is a small country, you will think, and with a very different economic structure from Pakistan. But it's still an economy where agriculture plays a dominant role. Cambodia faced many familiar constraints in developing its agricultural sector: high energy costs, limited irrigation, poor transport infrastructure, and limited access to finance. But with a few improvements and very motivated farmers, by the early 2000s, Cambodia achieved self-sufficiency in rice, which was its main staple crop, and was beginning to generate a surplus. In the early days, this surplus was exported informally to neighboring countries where it was processed and milled. Farmers invested the proceeds from this surplus in better seeds, better fertilizer, better crop management, which again further increased the surplus. The government began to invest in rural infrastructure, roads and irrigation. Again, it improved yields and reduced post-harvest losses, further increasing the exportable surplus. Then in 2010, recognizing the opportunity to move up the value chain from exporting low-value paddy to higher value milled rice, the government adopted a rice export strategy to keep most of the value of the exported surplus in Cambodia. They did this with four things. First, they streamlined export procedures. Second, they reduced the informal fees and logistical barriers to exports. Third, they encouraged private sector investment in export-grade milling, storage, and processing. And then finally, and naturally, they facilitated access to finance and to information for farmers and millers. Sure, Cambodia benefited from favorable trade arrangements, but even when these preferences were changed or partially withdrawn later, the industry had already developed a global customer base. Cambodia focused on the highest value fragrant rice varieties to capture the highest value segment of the market. And in 2012, the World Rice Conference awarded Cambodia's jasmine rice the award of the world's best rice, an award it has won many times since. Cambodia's transformation was not just about producing more rice. It was about moving up the value chain from low-value paddy exports to branded high-quality milled rice, supported by policy reform, private investment, and strategic market positioning. In 12 years, Cambodia went from creating a small surplus of rice paddy to producing the finest rice in the world. Thank you.